So Cameron, now that we're approaching the end of the financial year, a lot of people will be starting to receive their superannuation statements. It's fair to say that returns from superannuation have been a little bit softer than we're used to seeing. What are your thoughts on that?
Investment markets have been mixed in the last 12 months, and the heady days of double-digit returns that we've been lucky to experience in the last 2 to 3 years are unlikely to be present for most super members.
Fair to say that are you better off to hold the course, or maybe they should sort of reassess where their monies are currently invested?
Yeah, so super risk profiling is different for each individual member. Some approaching retirement may want to lock in what they've got and protect it. Others at the start of their career may be looking for greater growth opportunities. It's probably a conversation that needs to be had with a financial professional to work out a specific strategy for the individual. And we would encourage people that have got a long-term strategy in place to consider the economic environment of the times, but not to make rash judgments.
All right, well, breaking down the specific asset classes, what would you say is really driving performance?
It's really a dichotomy between two different types of assets. Defensives are continuing to give very low but positive returns due to the low interest rate environment around the world. In Australia, our official interest rates dropped from 2% to 1.75 with potential future reductions to go, which is a historical low. But even that is higher than we're seeing in some other Western markets where interest rates are effectively zero or only just over.
A lot of my clients are asking me about how the changes to the budget will affect them personally.
Yes.
And you touched on the fact that it's more noise and you're sort of considering the market from a macro point of view.
Yeah.
Is that a fair comment to say?
I think in terms of investment returns it is. There's a lot of change flagged in the budget around super, and some of it is genuinely will have a real impact on clients.
Yep.
But some of it is not yet legislated and could be watered down or changed.
Absolutely.
So there's a lot to digest, and again, I think that's where professional advice comes to the fore in terms of trying to make changes or understand what that means.
So is it the same old story of bricks and mortar once again?
Well, I think Australians have a love affair with physical property.
They certainly do.
And you can see that in the recent house prices, especially in Sydney and Melbourne. I think there is some risk of the market being frothy and potentially a little hot, and people looking for investments, albeit property providing a great return in the last few years, it's not necessarily going to continue forever.
Yep.
And I think even when rates begin to flatten and rise eventually, anyone who's carrying a lot of debt could be negatively exposed to that, and I think that could be a risk for the property market to potentially come off in the medium term.
Oh.
Yes.
Are there any other industries in your mind that you think will perform well?
I think Australia doesn't have a lot of specific investment opportunities on the stock market around IT or biotech, which is what has driven a lot of growth in America.
Yep.
But there are some, and I think there's some very interesting small to medium cap stocks in those industries that have the opportunity to provide higher than market returns.
Absolutely.
Over a long period of time, but with a cautious note just around short-term price volatility.
Absolutely, and as you were saying before, the valuation of that stock could be impeded by overall market lack of confidence in the market. But the actual fund itself or the company itself has a lot of potential.
It's always the way. I think herd mentality and psychology will always have short-term impacts on the market. But if the fundamentals of a company or a fund are true, and investors should have the patience to see out any short-term aberrations and go the distance, and that's typically how we see people be rewarded for their investment decisions.
No, absolutely, and it's great to hear you say that, because for a lot of my clients I have the same philosophy. I always believe property and infrastructure, they will perform very well in the short to medium term, and there are a lot of funds and companies out there which are currently undervalued and represent great opportunities for our clients.
No, I'd agree. I'd agree. I think there's always an opportunity to create a portfolio which plays to the current economic climate, has diversity across many asset classes, and reduces risk in that manner, that can still make the most of any economic situation, even if it's not as positive as it might have been a few years ago.
All right, Cameron, thank you so much for your time.
No, my pleasure. Thank you.
Thank you.